Good morning. My name is Jamie Kelly, and I am the team lead on the Payroll Retirement and Savings Plan team. And it is with my great pleasure to welcome you to our 2021 Fall Conference. 2020 and 2021 have certainly not been the easiest years. Sitting here right now thinking about all we've been through really amazes me. 2020 changed everything. It especially changed the way that we work. In March of 2020, most New York State workers went from working in an office to working from their homes. COVID-19 was one of the biggest disruptors to the way that we work and to the way we do business. Unfortunately, it still interrupts our daily business routines. Just a few weeks ago, we were asking, are we going back into the office? And then we asked, are we going back 100% or are we going back part-time? Nothing seemed clear-cut. And to be honest, as we slowly transition back to what I call our new norm, even this new norm seems unclear. So now I say this. The Office of the State Comptroller came with no exception when it came to changes. OSC experienced a major payroll upgrade. On March 15, 2021, almost a year to date from being sent home, PayServ, our payroll system, transitioned from PeopleSoft version 9.1 to 9.2. Many agencies had the opportunity to see the changes firsthand during the agency testing and training period. This period was to allow agencies to become familiar with the system upgrades and the new panels prior to go live. For those of you who've been in payroll for some time, you will probably agree that the payroll upgrade has been one disruptor that hits close to home. The retirement and savings plan team was greatly impacted as several of our day-to-day panels were changed. And just like trying to get back to our day-to-day norm with returning to the office, OSC auditors have observed that adjusting to PayServ 9.2 may also seem unclear for many of you. The goal of today's presentation is to train and share valuable material that will help you all with your daily assignments as it relates to the retirement and savings plan team. Today's presenters are, again, myself, Jamie Kelly, Lori Colts, and Christopher Hansen. Our agenda will be as followed. Back to the basics, payroll bulletins, new ORP and VDC arrears calculator, ORP and VDC participants break-in service, 9.2, what hasn't changed, and what has changed, and finally, entering new retirement selections and 403B deductions. Back to the basics. PayServ Bulletin Board messages allow us to communicate important system alerts, such as outages, upcoming changes, compressed schedules, and are periodically posted to the PayServ Bulletin Board. PS Query and Control D also have bulletin boards. I mention this today because OSC cannot stress the importance for payroll officers and backups to read and understand what we publish. We learn as children that bulletin boards are a very important component in the classroom, as they provide a way to introduce new material. OSC is trying to do the exact same thing with our bulletin board messages. We publish and share information in several ways throughout the year, but the very first location you will find important information is directly in PayServ. This here is an image of the PayServ bulletin board. Here you will see several announcements, several important announcements. We all see this board before we even hit the Proceed to PayServ button. Payroll User Group, also known as the PUG. This allows a partnership between OSC and agency staff. It also serves as a forum to improve payroll processing performances, address issues of mutual concerns, and to develop opportunities to network with peers. The PayServ user group meetings at one point were held right here at OSC. But for obvious reasons, we've discontinued this. Personally, it was always one of my favorite things attending the PUG. I started attending the PUG when I was a DMV employee, and it really gave us the opportunity to do meet and greets. And I do hope that someday we do get back to in-house PUG meetings. But for now, replacing the PUG in-house meetings, we have transitioned to the PUG newsletter. I hope that all of you have had the opportunity to receive and read this monthly newsletter, because this is where the meat and the potatoes of information come from. We take this opportunity to really increase awareness and offer information on what changes or facts need to be absorbed by all payroll staff. We ask to please read this and reach out if and when something posted does not seem clear. And now I would like to introduce Lori Coates, who will start off discussing payroll bulletins. Thank you.
Thank you, Jamie, and good morning, everyone. I'm going to start today with payroll bulletins because they're also part of the basics. In addition to fun facts about payroll bulletins, I will also cover what are payroll bulletins, where you can find them, and what information you will find on a bulletin. So payroll bulletins are released by OSC and contain pertinent payroll information or changes in policies and procedures. Payroll bulletins are used by the Bureau to provide information and instruction to state agency payroll officers. Bulletin topics can include when upcoming payments will be issued, such as retro pay, longevity pay, or performance advances, just to name a few. Changes or updates to payroll processing procedures, such as overtime or earnings limits for New York State employees' retirement or teachers' retirement members, or the process for an upcoming 2-year look-back for ORP VDC members. System upgrades, such as Payroll Improvement Project. A payroll bulletin will tell you the subject, the purpose, the affected employees, the effective dates, OSC and/or agency actions, and who to contact with questions. The Comptroller's website is where you'll find payroll bulletins. But did you know that you can receive emails when a new bulletin is published? If you do not receive the email blast and want to, please contact Kelly Carey through the Payroll Services mailbox, payroll@osc.ny.gov. To find published payroll bulletins going back to almost the beginning of time, then the Comptroller's website is what you want. You will find payroll bulletins going back to 1972. When you click on Agencies at the top of the page, then New York State Payroll on the left side, it will bring you to the page you see here on the right. This is where you'll find them all, the motherlode of payroll bulletins. You will find bulletins that apply to multiple agencies under all state agencies, such as updated max contributions allowed for the new year for deferred compensation, and payroll bulletins that pertain to only certain agencies. For example, the State University of New York, you'll find bulletins relating only to SUNY, such as UUP dues increase, or Payroll Improvement Project bulletins, where you will find just about everything you need to know about the PayServ upgrade in March of this year. Payroll Improvement Project bulletins. Currently available are bulletins 1 through 18. If you haven't already, we highly recommend that you check out every single one of these bulletins, and if it pertains to your job, you should either save an electronic copy or print it for reference. A few to point out: PIP 5, Navigation Changes in PayServ 9.2. PIP 8, What is changing in PayServ version 9.2? PIP 10, changes to pension plans in PayServ 9.2. PIP 11, changes to savings plans. And PIP 14, ORP, VDC, arrears. Payroll Bulletin PIP 8 contains information for everything that changed, not just retirement information, with links to specific bulletins. There are attachments in some of the PIP bulletins, tremendously helpful attachments, and you might see the same attachment in more than one bulletin depending on what the bulletin is referencing. The Retirement Plans Crosswalk. This crosswalk will tell you what the plan type was in 9.1 and what the new plan type is in 9.2. 7R. This is no longer an option in 9.2. Entering a 7R was never a requirement as far as OSC was concerned. The only employees that can opt out are optional employees, for example, part-time temp. So it will never be questioned as to why they haven't elected. As an optional employee, they won't be auto-enrolled in ERS unless they are an existing member with another employer now or at some time in the past. Important note here, if an employee is currently enrolled in NISLRS, either while employed with a local entity, the city, town, village, or school, for instance, like a summer job at a local park or a part-time temp at DOT, and did not withdraw during their break in service, not enrolling is not an option, even for optional employees. If you have an employee opt out, whatever paperwork you would have them sign should be retained at the agency level in their personnel file if available, and you could enter a note in general comments if you choose, but this is also not a requirement. The benefit plans crosswalk. Again, the benefit plan that was versus the benefit plan that is. Now you may know off the top of your head that someone enrolled in the ORP with an election date from 2005 had a benefit plan of T7 SNYB, but what is it now? This crosswalk will tell you. I have both this crosswalk and the retirement plans crosswalk printed and taped to my monitors because I reference it every day. Other important links can be found on this page as well, such as the agency submission schedule. You can always find a copy of the schedule on the comptroller's website. An updated schedule is released in a payroll bulletin, usually around February or March. And remember that email blast I mentioned a few slides back. So a lot of information here is an understatement, but what does it all mean? Have you ever heard the question, how do you eat an elephant? If not, the answer is one bite at a time. So let's look at the agency submission schedule, one bite at a time. We're going to focus on 4 columns here today. No, I'm not telling you that the rest of the information is not important. I'm saying for the retirement and savings plans team, this is what you need to know. Payroll period, effective dates, check dates, and online deductions, taxes, direct deposits. So let's look at the payroll period and effective dates. Each check date has 3 lines because New York State employees are paid either current, lag, or extra lag. And to use the correct date for the effective date or deduction begin date, you're going to need to know if your employee is current, lag, or extra lag. The check date, which is the check day payday. Online deductions, taxes, direct deposit. This is telling you when you can be in PayServ, entering retirement information or 403B deductions or changing the contributions rate to take effect for a specific paycheck. So let's look at this and see if we can locate admin check date of 11/10/21. Can you tell me what is the first day of the pay period for a lag employee? If you answer 10/14/21, you're right. When can you enter online deductions to take effect for the 11/10/21 check date? That's right, from noon on Thursday, 10/21/21 to Friday, 10/29/21. We confirm payroll the week prior to issue, so the 11/10/21 check will be confirmed, as of right now, on Wednesday, 11/3/21. Wednesday is Calc and Confirm Day, but sometimes it's Tuesday. So if you're in PayServ entering online deductions while calcs are running, you could cause the calc to fail. Or if you enter a boatload of new enrollees the week we confirm, you are probably going to receive an email from one of us with this schedule as an attachment. Now, is there ever a time on a Monday or a Tuesday that you must get someone entered? Of course there is, but please email us and we'll let you know if it's okay to proceed. Pop quiz, true or false? Payroll Bulletins will tell you when a process changes, and if there's a new location in PayServ, the bulletin will give you the path. True or false? All payroll bulletins, new, old, and revised, are available on the Comptroller's website. And for the last one, true or false? Valuable attachments are available in bulletins such as calculators and crosswalks. And of course the answer, yes to all. So now that you know all about payroll bulletins, I'd like to introduce Chris Hansen, who will go over ORP, VDC arrears, and breaks in service. But I'll be back.
Thank you, Lori. I'll be taking over for a bit to show you all two helpful tools that were created to help make your jobs easier. Those of you familiar with the ORP are surely also familiar with entering ORP arrears. As I'm sure you've noticed, there are a ton of new arrears codes involved now, and this can be quite daunting. The first tool I will show you is a handy arrears calculator to help take the guesswork out of this process. This calculator can be found on PIP Bulletin 14 and can be downloaded directly from that bulletin and saved on your computer. Where you used to manually piece together a spreadsheet, this calculator allows you to enter the pensionable earning information along with some identifying information, and it will not only give you both the employee and employer arrears totals, but it will also tell you which codes to use for each and the flat amount deduction that should be coming out of every check. Here is a screenshot of the calculator itself. I am going to take you on a quick walkthrough for how to use it. A more in-depth description can be found on PIP Bulletin 14. We are going to start at the top, where you will be filling in most, but not all, of the pink cells. You will start by entering the employee ID number along with the record that you were calculating the arrears for. You can also enter the arrears begin date, which will usually be the next upcoming paycheck. You can enter an arrears end date if you like, but it's not required. Now we'll be getting into the most important fields. The arrears benefit plan will determine which codes the calculator tells you to enter, so be very careful to enter this correctly, or it will tell you to enter the incorrect codes. You will also want to enter the employee's election date and contribution rate. The employer contribution rate will automatically populate based on the arrears benefit plan you choose. In the left column, there are fields titled Current Benefit Plan and Current EE Contribution Percentage. Those are there in case the employee's current benefit plan or contribution rate differ from the period you are calculating the arrears for. These fields are not required, but can be entered if you would like. For the time being, you will be leaving the deduction pay periods and total pensionable earnings blank. We will circle back around to those in a bit. Next, you will want to enter the check dates and pensionable earnings for the paychecks that were missed. Once you have completed this section, the total pensionable earnings box will give you the sum of all the pensionable earnings. You're going to type that number into the pink total pensionable earnings cell in the top section. The final cell, deduction pay periods, is the total number of paychecks that you entered into the lower section. What this will do is calculate a flat amount deduction based on the number of checks you entered in. You will see that the deduction codes, flat amount, and goal amount fields have all populated. You will enter this information right into PayServ. Now you may be asking, isn't the gross earnings on the check the same as the pensionable earnings? The answer to that is sometimes. I am going to show you a nice shortcut to take the guesswork out of determining the pensionable earnings for each check. Here you see a screenshot of the Review Paycheck panel in PayServ. If you look at the bottom on the Paycheck Earnings tab, you will see a section called Special Accumulators. This section should be expanded by default, but if it is not, simply click the little arrow next to it and it will expand. So now you're looking at the Special Accumulator section and are seeing a ton of codes. Which one do you want? You'll want to look for code number 100. It's usually found on the second page of the Special Accumulators codes. This code will give you all the pensionable earnings for that paycheck. The pensionable earnings will often equal the gross earnings, but there are sometimes non-pensionable earn codes that you would need to subtract, such as the HSA Housing Staff Allowance. This will save you the time spent looking through the earn codes on each check and give you only the pensionable earnings for each paycheck. Now we are going to change gears. If you want more information or have any questions, please refer to PIP Bulletin 14 or email the Payroll Retirement Mailbox and we'd be glad to help you. The next topic I am going to cover is how to calculate the ORP breaks in service for an employee. Many of you should already be quite familiar with this topic. We are going to cover the following topics. What is the NBEN 742 report and where do you find it? How to tell what dates the employee is missing. How can this impact the employee? What information do you need to calculate the breaks in service? How to use the ORP VDC breaks in service calculator. This is a sample screenshot from the NBEN 742 report. This report is run on a weekly basis and contains a list of all active employees who are missing a 366 or 7-year date on their suspense panel. These employees will remain on this report until their breaks in service results have been entered into PayServ or they separate from state service. The NBEN 742A report is for ORP enrolled employees, and the NBEN 742B is for employees enrolled in the VDC. We cannot stress enough how important it is to run and review this report regularly. This is the suspense page in PayServ. What is suspense, some of you may be asking? Suspense is a term referring to the period of time before a new ORP member's contributions are vested. For the first 366 days of enrolled service, the employee's contributions are held in escrow. Upon completing this 366-day period, the money becomes vested and enters the market. This panel shows when an ORP member is projected to vest their suspense contributions. The check date escrow money sent field will populate with the check date that the employee's money vests on once the employee's status is updated to participating. After 7 years of service, employees enrolled in the ORP will receive an increase in the contribution rate for their employer-funded contributions. If an employee is terminated, any unmet dates on this panel will be wiped by the system. Since the 366 and 7-year dates are based on days of active service, any breaks in service will change these completion dates. As you can see here, our sample employee has already met her 366 date and her suspense contributions were vested. She did not yet reach her 7-year date before her last termination though, so this field has been wiped out and will need to be recalculated. Here is the path to the suspense page. You may ask, why do we need to do these calculations? If an employee has a blank 366 date, their status will not update to participating, and their money will potentially never enter the market and will be held in escrow indefinitely. The same could be said for the 7-year date. The employee will be missing out on an increased employer contributions until the 7-year date has been entered. In both instances, the employee would miss out on earning opportunities that could greatly impact the amount they have in their retirement account when the time comes to retire. What information is required to calculate a break in service? You will want a few things that can easily be found in PayServ. You will want to note the election date from the Employee Savings Plans panel, as that is the starting point from where we will begin calculating the breaks. Here's the path to the Savings Plans panel. You will also want to pull up the employee's history to see all the termination and rehire dates. Here is the path to that panel. Now we will take a look at those panels and where to find the information you'll need on them. Here is a Savings Plans panel. I've highlighted the election date field. You will need to make a note of this date. You can write it down or print this panel if it makes it easier for you. This is a starting point from where we will begin tracking the breaks in service. This is the Employee History Inquiry. You can obtain this information from job data as well, but this panel makes it much easier to find all of the termination and rehire dates. I have marked the election date in blue. As I stated previously, this is where we will begin noting the termination and rehire dates. Any termination or rehire dates that occur before the election date will not be counted, as the employee was not a member of the ORP at that point. I have marked the first few sets of termination and rehire dates in red and green. The termination dates are marked with a T and a code of TER. The rehire dates will immediately follow the termination rows and are marked with an A and a code of REH. You will want to note all of these from oldest to newest, starting at the election date. We will enter the effective dates, not the action dates for these, into our calculator. The effective dates are the leftmost dates and are highlighted in this screenshot. I would recommend going through these very slowly and carefully, as some employees will have quite a few breaks, and scrolling on a computer makes it very easy to miss some of them. You could also print this panel out, as you could then highlight the termination and rehire dates. You can find a download link for the Breaks in Service Calculator on Payroll Bulletin 1665. You can save this file to your computer so you'll have access to it for when you need to calculate your breaks in service. As a quick overview of the process, the agency will be responsible to download your NBEN 742 report. This does not have to be done every week, but it would be a good idea to look at it at least once a month, as it can quickly grow quite large during times where large numbers of employees are rehired. You will then use the calculator to recalculate the 366 and 7-year dates. You will submit your results to the OSC Payroll Retirement Mailbox. Your agency's auditor will review your calculations and will update the suspense page in PayServ. Your auditor will reach out if any errors or issues are found during the review. Now that we have gotten all of our information, it's time to start inputting this into the calculator. Each calculator file can accommodate the breaks in service calculations for up to 20 employees. A spreadsheet of your results will be automatically populated on the Summary tab of the calculator file. This means that you only need to send one file for up to 20 employees. You will want to begin by entering your agency's department ID, your name, and the date you are submitting your calculations into the boxes at the top of the Summary tab. This is so your auditor will know when your file was submitted and who to contact should the need arise. Once you have entered your information on the Summary tab, we can begin with the First Employee tab. You will start by entering the identification information for the employee at the top of the page. You will enter the employee's name, employee ID number, applicable record numbers, and the employee's election date that you obtained from the Savings Plans panel. Now that we have completed the top part, we can begin entering our breaks in service dates. You will enter the termination and rehire dates, oldest to newest, in the section below. You will notice that each set of dates you enter will populate the number of days for each break and will also update the adjusted hire/new election date field. You will continue entering these dates until you have reached the end of the employee's history. You will see the number of days for each break. Once you are finished, you can scroll to the bottom of the page to see the total number of days the employee was on a break in service. Our employee was separated from service for a total of 526 days at the time these calculations were completed. Going back to our Summary tab, we can see that the employee's information has been automatically populated along with the adjusted hire date. Now, those of you who are already familiar with this process are probably saying, yeah, this process sounds exactly the same as it was previously. And you'd be correct. Your part in this process has not changed. What has changed is what the file outputs. It has been retrofitted to output information in the format that PayServ 9.2 uses. I will show you that now. As we can see, the adjusted hire date for this employee is now June 26th, 2015. Now that you have completed your calculations for this employee, you can complete the rest of the employees on your NBEN 742 report. You will then email the file to the payroll retirement mailbox for review. We will review your results, and we will reach out if there are any questions or issues so that the calculations can be revised. Once we are in agreement on the results, OSC will update the suspense page. This is where the new output comes into play. OSC will enter the adjusted hire date from your calculator, and PayServ will populate all blank dates on the suspense page, recalculated based upon this date. As you can see, we have entered June 26, 2015, and PayServ has updated the projected 7-year date with June 26, 2022. Once this has been completed, the employee will fall off of your NBEN 742 report and will not reappear unless they have another break in service. Once they have met both their 366 and 7-year dates, you will not need to calculate any other breaks in service for them. You may be asking, do I really have to do these calculations every time an employee is terminated and is rehired? The answer to that question is yes. But the more frequently you work on your NBEN 742 report, the smaller your list should be, so it definitely pays to be proactive. Lastly, OSC is going to again begin tracking the number of employees on each of the agency's NBEN 742 reports, as we are also trying to be proactive, and we'll be reaching out if any of the lists grow exceedingly large. We had decided to be a little lenient about it while we all adjusted to the new PayServ upgrade, but now need to get it back on track. Now I would like to thank you for your time, and I'm going to turn it back over to Lori so that she can cover some of what has stayed the same and what has changed in PayServ 9.2. Thank you.
Thank you, Chris. See, told you I'd be back. Now we're going to go over what stayed the same in regards to retirement and savings plans in PayServ and what's new. And I'll be honest, not a lot stayed the same. So let's take a moment and celebrate this one slide. Contribution and arrears deductions for the retirement systems above did not change. I'm not going to list all the different deduction codes, but for example, New York State ERS, retirement contributions are still 606 and 607, and in General Deductions Data Panel, arrears are still 608 and 609, and loans are 610. They no longer have the same plan type or benefit plan, and the retirement is entered in a different panel, but the deduction codes are the same. You know what stayed the same. Now what's different? Big change here. Retirement plans panel is obsolete. You cannot add a row. Retirement selections are all entered under the USA Pension Plan or Savings Plan panel. The 7R, which we already talked about, is no longer an option. Retirement Plans panel from 9.1 is no longer used. We have access for historical purposes because there is information here that we can use. This just happens to be a screenshot of an ERS, old plan type 7Y. but regardless of the plan type, the information is basically the same. The panel is obsolete. You have view only and can no longer add a row. The panel is terminated. All retirements in this panel were terminated for 9.2 conversion purposes. We can see the election date here, but you'll want to include history so that you can see additional rows. By using the arrow to see additional panels, we can see more information that might be needed. The election date was visible on the first page, but now we can see the old benefit plan. So why is this important? All active job and retirement records in 9.1 were converted to 9.2, and records for employees terminated in the last 5 years were converted to 9.2. That means that if you have a rehire that was terminated prior to January 1st, 2015, they did not have their retirement information converted to 9.2. You might want to make it a habit to look at the obsolete retirement plans panel just to see if there's a prior election. For prior ORP members, it also might be a good idea to shoot the retirement mailbox an email to make sure the employee didn't request a suspense refund. Where did everything go? Believe it or not, we still get this question. Payroll Bulletin, PIP 10, changes to pension plans and PayServ 9.2. Everything except the ORP VDC is now entered in USA pension plans. New York State Employees Retirement System, New York State Police and Fire, New York City Employees Retirement System, New York City and New York State Teachers Retirement System, and New York City Board of Education. New York State ERS and PDEF, since their upgrade in March of 2019, you should not have to manually enter any ERS enrollments in PayServ, but there are times when you're asked to by an ERS rep. When you're asked to do this, we recommend entering a note in general comments regarding who contacted you to request the manual entry and why. Entering the information in USA pension plans is pretty much the same as it was in the old retirement plans panel. For a new election, you need to select the plan type, and if you're unsure, remember the retirement plan type crosswalk or click on the magnifying glass for a list. Deduction begin date is still going to equal the first day of the current pay period. Remember the agency submission schedule we talked about. And the election date, the benefit plan, the registration number, and option code are all the same. ORP VDC and 403B, most changes ever. They're both now entered and updated in the Savings Plans panel. 403B is no longer entered as a general deduction. Deferred compensation, this is not new. Some of you may know this already. Deferred comp has always been here in the Savings Plans panel. Entering a new election for the ORP VDC. So under plan type, you would enter 4Z. And if you can't remember the new plan type, refer to your retirement plan types crosswalk or click on the magnifying glass. The before tax and after tax investment panels at the bottom will go away when you select the plan type for the ORP. The coverage begin date is basically when the employee was eligible to enroll, but it doesn't really matter. There's nothing in PayServ that relies on this entry. It has no effect on anything, and I believe there might even be something in the works to hide this box. But in the meantime, it's here, so let's talk about it. If you want to enter the date of hire for an employee that was optional or a returning employee that didn't convert, keep in mind a couple of things. First, the date you enter here will populate in the deduction begin date. So if it's an older date, you must correct the deduction begin date. Second, if you have a returning employee that didn't convert and you try to enter the date that is before their new hire date, you will get an error message and be unable to save the page. But let's say you're updating the panel for a 2-year look back and you want to enter the employee's date of hire as the coverage begin date. That's fine. Just remember, you must correct the deduction begin date to reflect the first day of the current pay period. Bottom line, we suggest you use the first day of the current pay period in both boxes. Deduction begin date is the first day of the current pay period. Do not backdate, do not future date. The election date is going to populate to the current date and must be updated. Always been that way, and it's always going to be that way. Your percentage of earnings must also be entered, as it is no longer associated with the benefit plan. If you remember in 9.1, if a Tier 6 employee had mandatory contributions of 4.5%, the benefit plan would be T6 S045, and that was how the employee contribution was calculated. The new benefit plan points to what the employer share is, so the employee contribution must be entered here. Benefit plan. Again, if you're unsure, click on the magnifying glass. Otherwise, just type it in. 99% of the time, you will use the new Suspense benefit plan. It doesn't matter if the employee qualifies for a waiver or not. SUNY will use SNY SUS, CUNY will use CNY SUS, and for VDC, you'll use VDC SUS. If you have an employee that qualifies for a waiver, we'll do that on our side, like we've always done. Once the waiver has been completed, you'll know because the benefit plan will update to a participating benefit plan. For example, T6 SU08. The T6 equals Tier 6, SU for SUNY, and 08 is the amount of employer contributions. Two exceptions here. A returning employee that was terminated prior to January 1st, 2015, and the retirement information wasn't converted. We're not going to start them in a suspense benefit plan. A new employee that was a member of the ORP at a SUNY or CUNY affiliated community college. The requirement for this has not changed. Before the information can be entered into PayServ, your retirement auditor will still need all the required information from the community college and verification from TIA prior to entering. ORP arrears. Now I know Chris talked about this, but since we're talking about the ORP, arrears are still entered in the general deductions panel, and you still must calculate and enter them when the ORP is entered. This has not changed, but what has changed is the deduction codes and that you also must calculate and enter employer contributions. Please refer to Chris's slides in Payroll Bulletin PIP 14, ORP VDC arrears. Entering the 403B in the Savings Plans panel. Plan type 46. We're not going to spend a lot of time on this, only because there will be a change to this panel coming sometime in 2022. Of course, there'll be a payroll bulletin issued with information and guidance. One of the best changes to the 403B entries is that you no longer need to go into the deduction in the beginning of each new year and update the goal amount for employees that opt for or qualify for the 50+ additional contribution amount. One thing to keep in mind though, it is not optional. PayServ adds the additional allowance for all employees over the age of 50. You might get employees who don't want to contribute that much, and in that case, they need to adjust their contributions so that they hit only the regular max contribution by the last check of the year, which is currently $19,500 for tax year 2021. What's most important here, other than the deferral amounts, is the deduction begin date. Just like I showed you entering an ORP panel, we recommend you use the first day of the current pay period for your coverage begin date and let it populate the deduction begin date. The election date can remain as the current date, which will automatically populate, or make it match the other dates. Enter the 403B benefit plan or click the magnifying glass for options. Just because it's here, we'll talk a little bit about the Deferred Compensation panel. This panel is a view-only panel for agencies. You should not be able to add a row under the coverage selection, and like we talked about with the 403B panel, you'll see the coverage begin date, deduction begin date, and election date are all the same. Information regarding deferred compensation is communicated via an electronic file between Nationwide, the current vendor, and OSC. Agencies will never update this panel. And that concludes our presentation for today. Thank you so much for joining us.